to the show, trader friends. It is myself and Rich and the old school remix. Hey, Rich, how are you?
Well, and I am petrified.
Oh no, the tooth.
The reason I am coming to you from the alternative studio in South Kensington is because, yes, I have tooth surgery in about an hour and 30 minutes. So yeah, not especially. I don't think I've had a tooth out since I was about 12.
Wow. Wow. Have you got are you eating before that, because you can't eat after the procedure? Have you remembered to get some food?
Well, funny you say that. That's exactly what she said. She said you've got to have breakfast beforehand because you probably won't be eating the rest of the day. So I have a Deliveroo on the way, and he was meant to be here about 10 minutes ago, and he's still not here yet. So you're probably going to catch that live on air.
Oh, fantastic. Speaking of which, Rich, I miss you because we had new chairs delivered yesterday. Yeah, can we show our trader friends these new? They're very comfy, I have to say. A lot comfier than the last iteration. There we are. It's a bit of yeah, it's quite felty, but the nice thing is it's got this lumbar support here. The last chairs during fast markets almost fell off, so not a good. We're glad we returned those chairs now.
No toothpaste on those now, Ange.
I know, right? When we started this time last year, Rich went to brush his teeth, put his toothpaste and his toothbrush, not that it did much for his teeth, and then proceeded to sit on it live on air. And so when he stood up, it was a sight to behold.
Yeah, didn't realize for about 20 minutes. So now, talking about disasters, did you watch Celebrity Traitors last night, Ange?
No, I am still grappling with the time difference, but loads of people on the chat watch it. What happened?
It was the best television that BBC has had. There you go. There's Big Joe chasing Alan, and we thought that he had him. We thought that the whole thought process had been worked out between the three remaining people. Now, if you haven't seen it and you plan to watch it over the weekend, definitely go and make yourself a cup of tea now, because I am going to completely give it away.
Yep.
Big spoiler alert. But yeah, so there was 4 people left, and it was David, Nick, Joe, and Alan, who of course we know is the traitor. Now, they had the plan there. They were all set, and they voted for Joe instead of voting for Alan. So Joe left, and that left 3 of them. Now, anybody who studied economics is just recognize that as classic prisoner dilemma, right? You learn that in the first year of economics, because at that point they could either choose to banish again, right? Not knowing whether there's a traitor amongst them, obviously. They could choose to banish again, or that they were satisfied that all 3 of them were faithfuls and they would stay where they were, and they would share the money between 3 of them. So the obvious thing, you know, the traitor is going to vote green and vote that everything's good, right? Because that's their only incentive. They're never going to vote to banish. But the other 2, the only smart thing to do is banish again, even if you're confident that the other 2 are faithfuls. Because A, you either get a bigger share of the prize money, or B, you prove yourself to absolutely 100% be a faithful. So there is no downside to voting to banish again. And all 3 of them voted thumbs up, green, let's stay as we are.
Oh.
It was such a huge mistake from Nick, because Nick clearly is very intelligent, high IQ, because he's been great all the way through. However, that was his first massive mistake, and it cost him the game in the end, because if he had said banish again, he could then have said to David and Alan, right, well, now you know 100% I am a faithful. Therefore, if one of you is a traitor, the only thing you should have to do is vote for each other. So David and Alan would have voted for each other, and then Nick would have got to decide who was the traitor and who he wanted to get kicked out. So massive errors, but fantastic television all the same.
Rich, as it's on my watch list because many, including Amanda, love traders. How much time do I have to put towards watching the entire series from front to the end if I wanted to watch it over the weekend? 8 hours.
Well, I think it's 7, isn't it?
Oh my God.
Yes, 7 episodes.
Wow.
4 weeks, but this week there was only 1 episode, so yeah.
Cool. Right, let's have a look at what's coming up as well. We've got a raft of exciting people coming up. Are we going to press that button, Phil? They're trying to get it up. I can hear noises in the background. Obviously, we got Rich and myself all the way till Guess the Chart. Phil, you're going to fill us in on whether it's a US or European one, maybe a UK. We had a UK one yesterday. Fast markets will have Rich and only time will tell. Exciting stuff. That's mysterious, isn't it? And then we have Commodity Corner with myself and Simon Popple. Richie Rich is going to take up the US mantle, the flag, in the pre-market. And then we end the morning with myself and Bill Blaine, who is famous for his morning porridge.
Unfortunately, that 9 o'clock one's not true because I will be in the dental surgery at that point, getting pliers ripping my teeth out.
Thank you for that image.
And I think now the only story in town, there's my Deliveroo driver. So let's go to overnight action. And the only story in town is the AI names getting thumped yesterday. So why don't you show everybody what the moves were while I go and get my breakfast?
Yeah, sounds good. Hey friends, welcome back. Whilst Rich is getting his breakfast, the last one before he gets his teeth sorted out, turkey teeth maybe. Let's have a look at what we were talking about earlier on, and I'm going to show you the US 24-hour and extended view here, just to give you a sense if you missed it.
I'll forget the upside, go to the downside, Ange.
Yes, I'm just zooming in before Phil tells me in my ear to zoom in. There we are. So we have, he said zoom in now just to trigger me. Robinhood down more than 9% there. We also have obviously
so that was on numbers yesterday. So let's just take a second, right? Robinhood, of course, has been one of the huge performers along with Coinbase, along with AppLovin, and you know, in that sort of segment of the market. But Robinhood down 9%. So no matter how much interest they're getting, no matter how much, you know, these American retail fans are pumping this market, the stock had got ahead of expectations.
Yep, totally. And then also taking a look elsewhere, we've got, you know, pretty broad base there. Coinbase also down. Mara Holdings, a lot of the crypto names, obviously, because of what we've seen recently, crypto also being thumped. Palantir is down 5.7% there. And so, you know, it's pretty big moves there. Taking a look at Snap as well. Were you watching Snap overnight, Rich? Oh, he's gone to get his sandwich. Oh, is he back?
Even though they're in the same building as us.
Yes.
This is not a advertisement for Deliveroo.
So Snap, just getting everyone across Snap, this is one of the gainers jumping there after the social media firm beat third quarter sales estimates and announced a tie-up with Perplexity AI. Plenty of other news out there. One of the biggest things I think is, you know, the fact that analysts now expecting that there is going to be this year-on-year S&P 500 earnings growth of 16.8% on aggregate. However, there are tremors. Everyone's really concerned, as you've heard Rich and I talking over the last few days. Many big name CEOs, you know, coming out saying that there are real concerns that we're seeing the market overheating. However, many there still also saying that they don't think so. We had a poll yesterday about whether it is a bubble or not, and it seemed pretty split right down the middle. We've got a new poll that's...
Andrew, it was a bubble. There's absolutely no doubt now. It was a bubble because you've had the quantum computing names down 40% since we started talking about bubbles. You've had the rare earth names, MP materials, down 50%. You've got Meta down 20%. You've got Palantir has dropped 18% from the highs after numbers. It was a bubble. There is now no debate about it, but it's how much of that, the froth off the top has been knocked out already, or is it like my flat white here from Joe and the Juice, and it doesn't have any froth in it at all because it's not traveled well?
Yeah, and the froth has enough froth been taken off? Has it all been taken off, or do we see more froth being taken off? One of the key things that I was watching are those job numbers. Did you see the job numbers? Highest October job losses. This is the Challenger report. I'm going to try and get that graphic up here.
So those numbers came out just as we were finished recording the podcast yesterday. So we record podcast 11 until 12. We actually went to 12:02 yesterday because we wanted to get the Bank of England rate decision in. Of course, no cuts there, and quite a tight vote as well. But we go for a cheeky little pint afterwards, and right enough, the market started plummeting. And of course, we had just had an argument, Spice and I, the usual argument, bull versus bear, and Spice was looking a little bit nervous the longer that lunch went on, as the market came off so hard on the back of those numbers. So what was the big number, Ange, that spooked everybody?
So the big number was 153,000. That was 175% higher than they were a year earlier. And this is from Challenger Grain Christmas. This number, this 153,000, the biggest number for any October since 2003. So very significant. I mean, this could potentially be some companies, Rich, coming back to more moderate staffing levels after the pandemic era boom. But then again, it does cause a concern that many firms out there under pressure to cut costs, as there's this lowering of expectation of AI adoption. How much is it going to start, paying the ROI? Investors and companies might be running out of patience.
Well, this was the big debate in the last Federal Reserve press conference. Jerome Powell saying, we're not yet seeing cuts. What we're seeing, the jobs market, why the jobs market is starting to weaken, is that companies are seeing people leave, but they're not rehiring, right? And because there is no rehiring, then if the ones that are going into the job market are really struggling to find new jobs. So if companies aren't hiring and now we're starting to see more layoffs, then this is an additional bit of negative information that Jerome Powell hadn't previously talked about. So the dollar, of course, plunging yesterday. You actually saw cable benefit from this, and that weakness in the dollar has cable back above 131. But of course, weakness in the dollar, we know, can be beneficial for gold as well. So in the chat, Rags is asking, he's in his first year, or they are in their first year of trading. Do we have any thoughts on gold going down today? Well, if only we had an expert coming into the studio later, Anne.
Funnily enough, yeah, if only. Simon Popple, Rags, will be coming on with me at about 9:10 to talk about all things gold. 8:30 rather, I've been told, a bit earlier now. So make sure you get your coffees and get your questions in for that. But Simon Popple, of course, runs the gold program and can take all your questions and help you position. It's across the board, not just spot gold, but he talks about how to also invest in the miners as well and how to hedge. Right. Speaking of job losses, should we go on to something else? The biggest
I'm worried
ever.
what's coming next, Anne.
highest ever pay packet, pay rise, pay anything that one has ever seen. Let's have a look at the front of the FT because it is also covering that Elon Musk. All his Christmases come at once.
He's going to be a rich man if Tesla does what it plans to.
Yeah, have a look at that. I mean, what's interesting is 1 trillion, right? This 1 trillion. I mean, it might as well be 1 gajillion. The number just boggles. Let's have a look at what that actually means for the average person on the street. That number means you could buy every single car sold in the US this year. The pay of 10,000 CEOs of Starbucks. It's Switzerland if it were up for sale, if that were possible, but it's bigger than...
Well, no, it's the GDP of Switzerland. I don't think Switzerland would be sold for 1 year's GDP, but yeah.
Nominal annual GDP, that's right, which was just under $900 billion last year. Toyota, Volkswagen, Stellantis, Hyundai, Ford, GM, we could buy all of those, right, if you wanted to compete against Tesla. Scale's always good. What do you think about this story?
Well, let's not forget, Tesla has to grow in value by $7 trillion. So if Elon Musk manages to increase the value of a stock 700% and $7.5 trillion in the next 10 years, does he not deserve it?
You could argue that, but
I'd be pretty happy if I was a shareholder and he increased my shares, my wealth by 700%. He can have what he wants. I don't care. Just buy more shares.
I think the fact that he threatened to quit if the pay vote failed was more of a push. But
yeah, but it doesn't matter though, because he's not going to get it unless your stock goes up 700%. So I don't understand people's complaint.
I always thought it was going to get through, whether there was a complaint or not. So I'm agnostic on that front. He won that contentious vote as well last year, I think it was, to reapprove that $56 billion, was it, the pay package? So, which was then struck down by a judge in Delaware. But I was very, very, you heard me say this with Julian Wheeler on the show earlier in the week, that I was very, very confident he was going to get it past the line. So, yeah, I'm a long-term holder of Tesla, so I completely am on the same side that you're on.
Yes, you still got them.
I still have them.
Oh, well held, Dan. Talking about still having things and something being vastly overvalued at this present time. Steve, CDR, saying Rich doesn't know what time it is because he's lost his watch. Well, that's right. I've had to go back.
It's being sent to Boise.
Wear this. So these of you that can see what that is might be thinking, oh, fancy. Rich has got a nice expensive watch there. The only reason I bought this, I was in Bangkok and I was going past a market under a bridge. And my friend had just paid a silly amount for one of these. And I thought, well, that'll be funny because it's going to cost £64 for me to buy this. And my friend, probably had to pay a good 2 or 3 months' salary for his. So every time he wears his out, I'd make sure I wear mine out as well.
Yeah. I was going to ask you whether I remembered you telling me that story, whether it was a Bangkok special.
Yeah, but it'd be slightly ironic if I ended up getting myself into trouble and somebody tried to steal it and I got hurt because I was trying to protect my £64 watch.
Jugger chiming in saying they will pay Musk no matter what. Might be a smaller amount, though. Also, we've got someone earlier on in the chat. We've got so many people engaged in giving us, loads of fantastic ideas that it just zooms across the screen. But we had someone earlier saying, thanks, IG team. They've closed out of their quantum shorts. Who was that earlier on?
Oof.
Yeah.
Well done.
Well done, you. And also, good morning, Mr. Logic. Good morning, Steve. Good morning, London Guide as well. We've had a few new names recently, Rich, too. It was Jesse 14. It was Jesse 14 that says, close out of all my quantum shorts this morning.
Good, right. What's on the, there you go. Rico Seagal's also got a Patek Philippe for $30. Oh, you outdid me. I got done. And I see done. Good morning to Poppy there. Poppy dropping into the chat after a wonderful podcast yesterday. So a reminder, The Art of Investing will be released around about 4 p.m. this afternoon. And I'll give you a little bit of a teaser.
Come on,
there
sneak
is
preview.
a change in the portfolio. There is a change in the portfolio tonight.
Are you going to tell us, give us a bit of a teaser by, you know, is it a significant part of the portfolio? Is it the chairman?
No, the chairman, sack the chairman is
trying to trigger popular.
Starting to gain momentum on Twitter. But yeah, as he says there is an important close tonight. So the way that we do it, we want to be fair to everybody, want to make sure that everybody, if they are, you know, happen to do things in their own portfolio as well, then we do not get to close the position until after the podcast has been released. So it's on, even though we record it on a Thursday lunchtime, we change the positions on a Friday closing auction price. Nice.
Right, so a reminder that goes live and is published later on today. We'll also drop it into Discord so you can easily get your hands on it. Speaking of get your hands on it, the Bank of England, were you around for that yesterday? Or were you, I think you were off to record the...
No. Oh. As I said, it just, we recorded till 2 minutes past 12. Right. So we got the Bank of England decision live, and we could respond to it on there. So very, very tight on the voting.
Yeah. So it was as expected. No change there. Bank of England likely to continue. The outlook is it's likely to continue a gradual easing of interest rates. Market expecting another 2 cuts in 2025, and bring that to this op-ed an analysis by Miran Khan on the Times this morning. Miran writing their bank's interest rate decision is another blow for Reeves, the fact that it held its base rate at 4%.
And then if you go to the main page on the FT as well, the main front page, the third top story is the governor, Andrew Bailey, of course, saying that UK interest rates coming closer to levelling out.
There we are.
There it is. So yeah, that's another reason we see a little bit of a stronger GBP back above 131, but of course it's all ahead of the budget.
Yeah. 26 is DJ. And growth forecasts have been upgraded to around 1.5% for 2025. But the fact, though, is inflation is falling. It has peaked and it continues to fall, supported by this still restrictive monetary policy stance. So, yeah, interesting stuff. The 26, do watch out for IGs. We've got quite a few things coming to the fore, including this weekend. You might see some pictures of IGs, shall I say, thrust at the building societies out there, talking about the change or expected change in the ISA stocks and shares allowance. Don't want to give everything away.
Hands off our investments, Ange.
Yeah, hands off our investments. Give us more reason to invest in stocks and shares, because we know over time they tend to statistically give us more returns. No reward without risk. We're going to have to go to break now, otherwise we're going to slam into the next section. But stay with us because we've got loads coming up. Simon Popple gets the chart as well. Yeah, all your questions, put them here on the chat.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris C.J. Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hey, everyone. We are almost at that wonderful spot that I look forward to every morning. The opening bell, got all my filters and everything sorted for you. What are you?
Do you have them sorted out?
I do have that. I have to say, the first day, complete admission, the first day back after my holiday, that was a rough
Right, let me run through some of the movers overnight then. So in the US, Airbnb up 5% after hours, better than expected holiday season outlook. Expedia up 15% on a big Q3 EPS beat, and they raised their full year revenues. So that's Expedia. Block or Square down 11%. So poor numbers there. MP Materials down 7% as a Q3 loss widened. So not good for your rare earths there. And then on the upgrades, downgrades, we've got, what would you guys know? ASML has been upgraded. And then EDP has been downgraded. Sainsbury's has been downgraded. UBS have been downgraded. And then Weir Group. And that is your upgrades and downgrades and the big movers.
Taking a look for Andrew McKelvey and many on the chat as well that have exposure to IAG. Q3 revenues, 9.3 billion there, missing estimates. Operating profit, 2 billion versus an estimated 2.06, 2.05 versus 2.06. So pretty similar. Saw some softness
looking
in
down 1 to
North
2%
America.
IAG.
Yep, and will be extremely
what we haven't
active.
talked about, Ange, ITV. So confirming they're in discussions with Sky or Comcast for the sale of the media and entertainment business. So that's looking up 10%. Let us know if any of you out there have got ITV. On the other side of that, I hope none of you have got Rightmove because that's looking down 10%.
Yeah, the number for ITV there, the magic number, 1.6 billion pounds. Okay, we got the bell, the London Stock Exchange. And we are off, people. Charts up there. I'm just having a look at the FTSE, waiting for that to uncross. It's just starting right now. Anglo-American down 0.2% there. Unilever's also uncrossed, down 0.5%. Drug makers, they're also in the red, still coming through there. Hikmat was bashed yesterday. It's now coming up some 1%. Any of those pop out to you, Rich?
Yeah, so AstraZeneca down 70 basis points, HSBC. So the big components of the FTSE there are some of the biggest losers. British American Tobacco down 0.5% as well. On the upside, we got British Land, Barclays up 1%. Barclays going from strength to strength. NatWest as well, and Lloyds. So UK banks, of course, the rumours are that Rachel Reeves isn't going to tax the banks additionally. So banks have had a decent couple of days there.
Yeah. Funny that, we'll tax everyone else, but not the banks, really, not the banks. Germany, let's cross over to Germany right now and having a look at the winners first. Commerzbank also having a bit of a good moment there, 1.8% up after it was down early in the session yesterday. Some of the car makers also revving back up again. Volkswagen up 0.2%. Mercedes-Benz also in the green or blue on the IG platform. Adidas, Richie Rich, up 0.2% at the moment. Let's cross over to the losers list.
And Puma, more importantly, at last, after a dreadful week in Puma, I'm still holding on. That is up 1.2% today, but that has just been a terrible trade. Thankfully, we just put it on in small size just to have a little nibble for a bit of M&A. But oof, I think even if it got bid for, I'd still be down on the trade.
You have nerves of steel there. Let's have a look elsewhere. We looked at the gainers just now. Let's take a look at the losers list there. Rheinmetall down 1.5%. Henkel also down 0.5% there. Bayer is down just a tad, but pretty much an up day there. Rich, let's go to France.
Now, how are Richemont doing? Because that is a very great quote from Shrimp Fred there. There's only one thing more vulgar than a fake Rolex, and that's the real one. I like that.
Richemont is just up a tad. Just want to also check on Hermes, which did have was it a downgrade, Phil, earlier on in the week? But
yeah,
take a look
Hermes was downgraded earlier, yeah.
Yeah, it's now up almost 1% there. Elsewhere in France, where we are, let's have a look at that. We've also got Stellantis and Publicis up 0.2%. Renault following the other car makers, Rich, higher there, and LVMH also higher there. Of course, you know you've arrived when apparently you're buying the Vuitton, not the LV. Let's have a look on the downside. Rentokil, not many on the losers list. It's mostly on the gainers there.
JD Sports up 1.2% along with Adidas there. So some positive news in retail there. Halfords as well. Halfords is higher. Trainline up 70 basis points, and Marks and Spencers. So,
have you seen the latest meme, Rich, of Trainline that's going through the Twitter sphere? That an advert of a family of 4 wearing chainmail. Have you seen that?
No, I haven't seen.
Recently. Yeah, looking elsewhere, crossing over to just checking on the indices, it's looking like it's cautiously higher, flat to higher. Also looking at the commodities space there, oil is up 1%, natural gas also up 8% there. Gold still keeping its nose above the 4,000 mark. And also, just taking a look at some of the moves as well, checking in on SAP too, because SAP has apparently been to offer concessions to settle the EU antitrust probe. It's up 0.5%. Any others? Let's have a look at the chat that you are watching.
Well, the FTSE, and we are talking about getting hats made with FTSE 10,000 on them, because hasn't it had an absolutely wonderful week?
Look at
as
that.
These AI names have been crashing and all the hot air and froth being smashed out of them, the FTSE has been absolutely bulletproof. So we are going to get hats made of FTSE 100 10,000.
Nice.
So if anybody knows a good hat maker, or that can put graphics on hats, then let us know. Right, we've got ITV off and running, so it is up 15%, even better than the estimates. That takes us up to 78 pence on ITV. The last time it was there, probably not too long ago, it was, the start of October.
Yeah, October 3rd at those levels. So well done you if you hung on to that. Shares in, this is after it confirmed those talks, as Rich was mentioning, to sell the broadcast unit to Comcast's Sky. Others that are moving, Salzgitter is also up, but we also have, let's have a look at that. We also have someone on the chat. So Salzgitter, they're up 2.4%. Someone mentioned Funko earlier. There we are.
Yeah, Boise.
Hey, Boise. You brave enough to go into Funko. There we Phil there saying, have you got Rich's Apple Watch yet? So yeah, just checking on Funko there. Are you pulling our leg there, Funko? Because I've just checked on that. Is that something that you know that we do not? Novo Nordisk, that's a downer. Novo is, let's have a look at that, is down 0.5% there. That's the ADR. But we are looking at indications.
Oh, wow.
Yeah.
And we've got to go straight to IAG, because Funky Gibbon has just told us
that is because of the miss. That is because of the miss, which I'm slightly annoyed by, because I was anticipating that they would beat. So
yeah, but nobody thought it was going to be down anything like 9%.
I know. Huge. It is huge. I am very disappointed. Let's have a look at the 5-minute chart here to give you a better view of Andrew's pain. Here we are. Now
IAG, of course, is British Airways, Iberia,
Aer Lingus.
and what's the
Aer Lingus?
An Aer Lingus, and what's the small carrier they've got?
Oh, Andrew McKilvey would know. Can't remember right now. It will come to me. Yeah. But right, I am disappointed. I think.
Well, tell us about that support level, Ange, at the 378 level.
If you look back at the chart, it takes us back to levels not seen since 11th
the start of October.
Yeah, start of October, 11th of August, going back further than that. But also, you know, it has come from a big climb. It's punched through the 20, the 50, and the 100 EMA. This is going to be something I will be looking closely at later on, because, you know, with the low oil prices and the fact that they have very full flights, something must have gone terribly wrong there. Revenue,
what's the chances of them holding that level, though, Ange?
Well, at this point in time, if you look at the area of interest, you know, there is a very good chance, unless it punches through that 366 level, you know, it might hold there, because if you look back at the chart, there seem to be healthy support buyers coming in that area of interest that I've just drawn.
Yeah, that's 4% lower though. What about here?
If we go through that, then the next level will be that 305, which would be very, very painful.
No, sorry. I mean, at £3.80, right? There's a big clump of trades there, September to October. So what does that tell us?
So is that my second rectangle that I've drawn up there? Is that what you're talking about? That perhaps if we go back up to those levels, then we could start to move higher. This is just frost coming off. But
Okay, so nothing to be done here on the technical side with them down 9% on the day.
well, for me, it would break, this is my own humble opinion, break my 7% rule. Do you subscribe to the 7% rule, Rich?
No.
If it's down 7%, then some people think they have a hard and fast rule, then you're out. But with IAG, I have conviction here. So I am still keen to see this bounce off, hopefully that support level or area of support at around 370, 366. And if it bounces off that, I might see whether or not I stay. But this is really disappointing. I expected some froth to come off. If it was disappointing, but not 8. Well, it's come back down now, not 8%, not 9% that we saw earlier. Rightmove down 24%. You talked about Rightmove earlier.
Oh God, big moves. Yeah, of course. We know that the property market is absolutely frozen at the moment, but we didn't know by quite how bad. 24%. Wow.
Let's see where we were when we last saw this level. I mean, that takes us back to around November 2023.
Andrew McKelvey certainly having conviction on IAG here. He has just bought some more and below £3.80. So that's the kind of support at 378, 379. And yeah, Andrew very happy with it around those levels.
Yeah.
But
Andrew's got strong conviction in IAG. I do too, but didn't expect a 9% drop. Rightmove expecting investments to slow profit growth in 2026, and also it's used that AI word again. Everyone's throwing in the AI word, including Rightmove. It's saying it's using AI to try and bolster operations in the longer term. The matter of the fact is the UK housing market still on its knees, and the forecast from Rightmove for 2026 for underlying operating profit growth, 3 to 5%, much slower than the 9% growth at the end of the first half of 2025.
So in US results season in 2023, AI was mentioned in 1,000 conference calls. This quarter just gone, AI so far has been mentioned in 10,000 company conference calls. It is just that, shows you the extent of the incredible change in just 2 years.
That's right. Chickens coming home to roost. Lots of people on the chat. Derek coming on saying Air France were down 13% on their numbers. Yes. London Guide, thank you. London Guide answering our question this morning about the smaller airline. This is Vueling. And also we've got Guess the Chart coming up. No watch to be offered, Apple Watch, because Rich has, of course, claimed his Apple Watch. But is it a US or European chart? It's a UK stock, right? Everyone ready? Get set, go.
£87p.
Guess the chart. trade that's flying higher. Peers on tech, watching that line. Chris got numbers that redefine. The chat lights up 1,000 hearts, moving together when the trading starts. No fear, no doubt, just that beat. This is where the world and rhythm meet. Trade live with IG. The sun breaks through the sky. Guess the chart and ride that high. Trade live with IG. We don't just watch, we thrive. We're singing charts. We're feeling alive. Hey now, London's glowing, FTSE is flowing, traders knowing. We're all in tune, the day's begun. The numbers rise just like the sun. Trade alive with IG. The future's in our eyes. Guess the chart beneath those skies. Trade alive with IG. Turn the world around. From every screen, that golden sound. Good morning, traders.
Yes, of course it was Vodafone R6 Senna. As soon as it came up, I went 87p. What's 87p? And of course it's Vodafone on Guess the Chart. Well done. Morning, Mr. Beecham.
Good morning. Can we ask the gallery not to pick small cap telecom stocks for Guess the Chart? To be large cap companies, not companies with share prices in 2 digits rather than 3. It's ridiculous.
It's true. They should really do a share consolidation, shouldn't they?
Could do it. They could change places with Goodwin that trades at what, sort of £20 a share or something ridiculous, that defense firm.
Yeah. Great call from Andrew McKelvey. IAG now trading, 385. So a nice 6% rally in a straight line there from the open. Beachy, it's been a tricky week, not just for IAG, but also for Rachel Reeves coming in on, was it Monday morning when she stepped away?
Tuesday morning. Was it Tuesday morning? Tuesday morning. Yeah.
So this budget's starting to look a little bit. It's going to be interesting. It's going to be a real game changer, or a defining moment in Labour's reign. But we started talking on the podcast yesterday about previous budget blunders. And I didn't really know much about the whole 1976 debacle when we had to go to the IMF with a begging bowl. What on earth happened there, my favourite historian?
You were there at the time, weren't you? I thought you were there. Yes, I mean, there are probably people watching this that lived through it as well. To be fair, I certainly didn't. But you had obviously the inflation at 25% in 1975. You had bond yields at stupid levels, borrowing costs. You just had the oil price crisis of 1973. And it really was the point at which everything just cracked. And James Callaghan was PM, and Dennis Healy, him with the eyebrows. You know, if you've watched Dennis Healy, those massive eyebrows, bushy things,
Of course.
finally had to go have a chancellor, and then eventually as chancellor had to have a budget. But then it just caused that crisis in sterling, and then you had to go, as the saying has it, cap in hand to the IMF for a loan, because the official reason was the public sector borrowing requirement had been overstated by the Treasury. And so the IMF comes in, and then you get big budget cuts, and obviously that precipitates really the 1979 election of Margaret Thatcher, because it's sort of the moment at which Callaghan loses the confidence of the country, if you like. Although even then, I suppose it's just beyond the scope of this. But yes, this is probably the big parallel, that the last time Labour government really had to increase taxes, increase borrowing. Because if you look at the actual tax bill, I was listening to this, I was saying to Anthony about this, there's a Radio 4 programme on this at the moment about taxation, saying that actually, if you look at, I know this is a slightly controversial topic, but if you look at the level of taxation in the UK on middle income earners, it is actually at its lowest level in about 50 years. It was much higher in the 70s, because of the way the basic rate has been cut over the last 50 years. Chancellors like Lawson and Kenneth Clarke and Gordon Brown have been able to do that, but it has meant that government is left with very few options at this point. And it wouldn't be fair, it would be unfair not to mention the fact that Rishi Sunak, we might not all be fans of Rishi Sunak, but he did say before the election, Labour will put your taxes up. And there was a tweet for this, and he can feel
Vindicated.
justified. Yeah, vindicated in that. Though no one will thank him for it, but he can certainly feel vindicated.
And then it's going to be really interesting, isn't it? Because there was one article in the FT over the weekend, and it was suggesting that, look, the way to get out of this is as Liz Truss was thinking, not as she put into practice, but as she was thinking. We got to get growth moving, we got to improve productivity. And you don't do that by taxing, especially the upper end. So the suggestion was that why don't Labour commit to income tax increase in 2028-29, but today put through a growth mandate and really try and get the economy going. And if all else fails, then you still satisfy the OBR by having an income tax increase in 28 and 29, but you make up the budget that way.
Because I don't think it gives her the headroom, I think, is what they're concerned about. What they've discovered is the headroom keeps getting cut because the productivity forecasts keep getting cut, and the growth forecasts keep getting cut. And the idea is that you have to go now, and you've still got 3 years until you have to start thinking about the election properly. And so if you go now, take the hit, the idea is it gives you the money to stabilize the situation and maybe find some money for investment that should start to pay off in 2 or 3 years' time. Now, I'm sure I can hear the chorus of viewers saying, but this is what they always promise and they won't get anywhere with it. But this is the logic. And she did say last year in the budget, we won't be coming back for tax rises. So she will be breaking that. It is a break in the manifesto pledge. Danny Finkelstein in the Times this week was saying if she has to do it, she then has to stand up, do it, and then send the letter to say the PM saying, now I have to resign. Because we said we wouldn't, and now we did. Yeah. And the problem is, of course, if the Chancellor goes, it often means the PM looks vulnerable, which is why, of course, this whole thing about the House last week didn't really blow up into anything else like it did with Angela Rayner, because essentially that was a line too far. And if you'd let the Chancellor go, as well as the chaos of letting a Chancellor go weeks before a budget, it obviously leaves the PM vulnerable too.
And I assume that perhaps isn't all done with. If
Well,
if he
yeah,
needs to go down that route.
Yeah, the thought occurred to me last night. If this is just a massive, maybe this is a late night on a Thursday, the massive head fake from the government that says they had to go to the OBR last night and said we are thinking about it. And it was leaked in the Times, so that the OBR can include it in its forecasts. If this is the kind of look over here and then they do something else, then that will be dramatic. But it certainly looks like they have really raised the balloon. They're flying the kite, if you like, and that it will happen.
Yeah.
Everyone knows it's going to happen. I think that was more or less the point of Tuesday, although I think she rather ducked the point by not actually really committing to it. But I think that really is the case.
Are you concerned with what's going to come upon us in a few weeks, specifically cable wise, gilts wise, or have they had long enough to actually get something planned that's concrete?
I think they've had long enough, and I think the market's had long enough to digest the implications of this. And you had the pound that was trading at 138 against the dollar at the end of June. It's now trading just above 131. So the market is kind of factoring this in. Yields have come down, and I think this has been the key possibility around the budget, is that the bearishness sort of reaches a peak in the weeks leading up to the budget, and then actually maybe there's room to hope that yes, you've got a government making people pay higher taxes, but that will lead to stabilized public finances. It will then lead to perhaps confidence recovering in the longer term. And of course, you've got the BOE likely, very likely, it seems at this stage, to cut rates in December to give the economy a bit of a boost. So maybe the growth starts to return that way. And it's still a long way to the next election. 3 years is still quite a long time. And it seems, I think the problem is, can the Labour Party stick it? Or they're going to get antsy about it, because if you start to get, because the next big test will be, it'd be interesting to see the polling next week and the week after, which is done in the wake of the budget. But then if the big test is May with the local elections, and how badly that goes, and whether the Labour Party starts to get proper jitters about that then, because I think that they think the markets will give them the benefit of the doubt. But it's the parliamentary party that is the risk, I think, at the moment.
Would we be more comfortable in the FTSE 100 or the FTSE 250 if I put a gun to your head? Yeah,
I think we're probably more in the 100. I think the 250 it just looms over us, doesn't it? I try to find where's the 250. So it's had a bit of it's a decent run, but it's come back the last few days, isn't it? We were trading up at 22, 3, and now just below 22. So it's taken a knock. Well, the FTSE, you have to nod my hat in your direction, because it's the turmoil. You've seen limited turmoil this week, but it's been a bit seesaw, whereas the FTSE continues to sail on. It was down a bit yesterday, but it was a record high. And I think it's because suddenly it's your refuge from AI, because there's almost nothing in the index about AI, despite Rightmove and others trying to shove in AI in every possible RNS, but there's nothing in there. So the fears that you're getting in Japan and South Korea and the US and even places like Germany aren't being felt. And that's why the FTSE has done so well. So sometimes being boring is good.
Yes, Chris, and we've always argued that is one of your strong points.
Yes, as soon as I said it, I thought yes, that's why I try to live that. That's my maxim: be boring, be unexciting. Yeah, sometimes it works.
Now, just a bit of housekeeping for those of you that follow the stocks that we talk about with peers. Then Marvell Technology. Yesterday, the story coming out that SoftBank had approached them for a takeover bid. Marvell opening up 12%, but of course with the AI sell-off, then it came back during the day down to $94, but certainly 94, the highest it's been in a while. Of course, Marvell traded as low as I think it was 60, 65 perhaps, just a matter of months ago. So yeah, Marvell in the crosshairs of SoftBank. Terms were not. They did not manage to come to an agreement. Was somebody close to the source stated. So not necessarily any talks ongoing, but it does show that argument that peers continue to build, that the technology that Marvell supplies to the data centers is going to be one in focus in the future.
Interesting times.
Right, Mr. Beecham, any big weekend plans?
No. Remembrance Sunday, so that's going to be the dominant thing, isn't it? I suppose on Sunday, parade and that kind of thing. So But yes, not much on the moment.
Good stuff. Right. Well, that is us. It's almost time for Popple and his gold focus. But we shall be seeing you, Chris. Is it you and I on Monday?
Yes.
Good stuff. So
Yes,
Chris
it
and I
is.
will be back on Monday morning. But everybody have a wonderful weekend. Have a far better day today that I'm about to have, because
Yes. Have
in
fun.
35 minutes, I'm going to have a pair of pliers in my mouth. I might just punch myself on the way out and save myself the £600 it's going to cost to get my tooth taken out.
Hope it's not too
So
bad.
should we do that live on air? Should we just
Yeah.
do that now? I just give myself a right hook.
Can you trade live while you do it? Could you do it with one hand?
Have a wonderful weekend all. We'll see you on Monday. Peace.
Bye.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hey, trader friends, welcome back to the show. And we have the one, the only Simon Popple. Welcome. Welcome back. It's been some time.
It has.
I feel like the last time we saw each other, we were talking about all-time highs and gold, you know, soaring. And look at it now. It has had the froth come off. What's your take on this? Is it time to buy back in, or are we going to see this period of consolidation for a bit?
Well, I think that, gold is very volatile, like silver and uranium and a lot of commodities. So this sell-off doesn't surprise me at all. I firmly believe that it'll go back up. We've previously talked about MIDI and things like that. Everything is still in place. But yes, you're going to get volatility. And I think a lot depends on your situation. If you're an investor, let's say a longer term investor, then I wouldn't be remotely worried about this. If you're a trader and you're kind of like taking positions on a sort of more short term basis, then obviously this is more difficult because, is it going to go back up today, tomorrow, next week, whenever? Unfortunately, it's very difficult to tell, but I think that, the fundamentals are very strong.
We have loads of new viewers since we last chatted. Rags, been waiting with bated breath for you. Lots of questions there. Also, some of the other ones that have joined the show very interested in gold and may not have heard of MIDI. So can you just give us a refresher?
Yeah, no, sure. Well, MIDI is an acronym for market uncertainty,
Love an acronym.
interest rates, debt, and inflation. Now, just cantering through those very quickly. Market uncertainty, bags of it. You know, we don't know what's happening in the markets. Are they going to go up and down? Are we going to have a crash? In terms of that, the long-term trend is more market uncertainty, but you could get something like a China-US trade deal. And if that happens, I'd see the price coming off quite a lot. But generally, the market uncertainty is there, and I think even if there is a trade deal, initially you'll see gold come off a lot, but then when people look into the deal itself, and
The devil is in the detail.
Exactly. It wouldn't surprise me at all if people go, well, actually, this isn't what I thought it was, and then gold starts to move back up again. But it could be quite a nasty period if there is a dip in the price. I is interest rates, as we know, the Fed cut interest rates recently, so that the kind of trajectory is still down. Lower interest rates, good for gold. D is debt. Debt is still flying up, so higher debt. Again, this kind of feeds into interest rates and market uncertainty. Higher debt, good for gold. And the last one is inflation. And gold is often viewed as a hedge against inflation. The US is very valid. There's some CPI numbers out today, I think. I think that the drivers, the MIDI drivers, as I call them, are still very much in place. And over the sort of medium to long term, I'm still expecting the price to go up.
Now, many of our viewers know that I generally, and you know as well, I don't like having too much risk on the table when I'm going on holiday, because I don't want to spend my entire time checking. I want a nice break. And of course, I've left the ones with high conviction on. But the ones where it's very volatile, high risk, I put stops on because I want to protect my profit. So when I arrived at KL International Airport, my phone just went bing, 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 bing. My stops, because I wanted to protect what it made on more so silver and palladium and platinum and also uranium, right? I wanted to make sure that I protected those profits. Where do you sit when it comes to stops?
Stops, I think holidays...
You can say if I did the wrong thing.
No.
You can absolutely say...
Not at all. I mean, I believe that if you're going away on holiday, on business, whatever you're doing, but if you're going to be away from your computer, I think stops are fantastic because you can lock your profit in, you're there, and then when you come back and you've got more time, you can start trading again. So I wouldn't say no to stops at all. If you're near a computer, then I'm less keen on them because you can kind of decide what the reason is for the fall. And for example, there's a US-China trade deal. I wouldn't be at all surprised if the gold price comes off a lot. But as I said earlier, if it then gets picked apart and if it turns out that perhaps it's not such a good trade deal after all, then you'll probably find the gold price goes back up. And if you're not careful, you could get stopped out sort of when the price goes down, and you could also miss when the price goes back up again. So I think in that situation, if you're going to be kind of looking at it on a more regular basis, I'd be more inclined not to use stops. Also, as we know, commodities can be very volatile, so you could actually get stopped out, and then the price comes back anyway.
So I didn't use stops on my high conviction play. So Swabi Gold, I didn't use a stop, and Greatland, I didn't use a stop, and boy, was it a roller coaster ride, because I'd gone on holiday in the rainforest, no Wi-Fi, no nothing, and then came back, and then of course by that time Trump had left KL, gone to meet Xi, and it had changed, and to come back and see like red. Down 3,000 on Sarabi was like, oh, what's so I held on, it's come back since. But for the likes of Sarabi, Greatland, miners out there, and happy to hear you tell me you did the wrong thing. But did I do the right thing, or do you think I should have put stops on those as well?
No, it's one of those things where if you're in the rainforest and there's no Wi-Fi, 3 cheers for that. But you don't want to be sitting on your sun lounger looking at your shares go down.
Yeah.
There's no joy in that whatsoever. So I would say that you did the right thing. You stuck at it. But I think that high conviction that you mentioned is important, because I think that if you've got high conviction and something moves down, you're kind of like, okay, that sucks, but I've got high conviction, so I'm going to wait for it to come back. If you've got stuff where you don't have high conviction, then I think having stops in is good, because you don't want to be sitting on your sun lounger going, oh God, I wish I'd put a stop in on that, or wish I'd sold that. And I'm not sure, if I've done the right thing, but it's certainly something to think about if you're going away, and you've got some profits, you want to protect your profits, and you can put stops in. I think the only thing I'd say is be sensible about it, because some commodities are more volatile than others. So you don't want to put a stop in at just a percent below it.
So which ones do you like? I mean, in terms of the mining space, you've got someone on the chat. Good morning to you, Rags. Loving the chat here. Also, someone earlier asked about Van Eck. I think it was IR. And please kindly ask me to talk about Van Eck Junior Gold Miner if possible. Do you have a view on that? Bring that up.
It's a very...
This is the ETF?
I think it is an ETF. Yeah, it's an ETF. I think, let me just talk about ETFs generally. I think ETFs are great if you're taking a short-term position in gold. When I say short-term, I'm talking about less than a year, because they're very cheap and you can get exposure to a lot of companies.
Yeah. So the top 10 holdings there, I'm going to put that on the screen for you.
Yeah, there you go. You've got exposure to a lot of companies. It's very cheap. I think also, with IG, with your spread, your spread betting, you've got tax free as well, which I think is fantastic. So, if you've got a position, a short-term position, less than a year, I think ETFs and spread betting could make a whole lot of sense. If you're talking about a more long-term position, I prefer to have the physical, because certainly in terms of gold and silver and platinum, the reason I don't like it short term is the cost of buying it and the cost of selling it doesn't really make a huge amount of sense. It probably costs you 3 to 4% to buy, 3 to 4% to sell, and it's great now the price is shooting up, that you get that money back pretty quickly. But if you're just investing over a short term, they can be a bit clunky to kind of buy, store, insure, and then sell. If you're going to do that in 6 months, especially with the tax advantages of an ETF, I think that's not a bad way to go.
Thank you very much. That was for you, IR. Let's take a look at a closer look at gold itself now, because we're starting to see it bounce off that 50 EMA very nicely. More green candles starting to emerge than red ones, at least in the area where I'm highlighting for you now. Is this the start of a new uptrend, or are you concerned by the price action that we've seen recently?
No, I mean, I'm not concerned. it is volatile, unfortunately. And so, for your trader friends, I think that you do need to be careful because it could still go down again. I don't think it'll go down anything like as much as it has done, but I think some of those smaller candles, could well happen. But I think the direction of travel is pretty clear. So for people who are, let's say, taking a longer term position, talking months, not weeks, then I think that it's definitely a commodity to be in. If they're taking a shorter term position, you do need to be a little bit careful.
Well, I'd like to pick your brains about, the cause and effect. What, to your mind, was the main reason for that pullback that we saw recently? I mean, I was in Asia. It felt as if it was down to warming relations between Xi and Trump and an unwinding of the big, huge rally that we'd seen recently. Or is there something else at play?
No, I think the China-US relations was a big determinant of that fall, which is one of the reasons why I think that fall was caused by largely Trump putting zero tariffs on Chinese goods, and that made a massive difference. Now, they're now talking about a trade deal. If there's a trade deal, it wouldn't surprise me if we get another line like that. But when they look at the detail of the trade deal, if it's not, let's say, viewed as a good one by the market, it'd be no surprise if we see a green line, not dissimilar to the red line. So that's why I'm saying you need to be careful about volatility. But yeah, I mean, I think the China-US trade deal was a massive contributor. But then you've got lots of other things like, the price has moved a hell of a lot in a short period of time. And I think there was a lot of profit taking as well. So I think that the China-US trade deal was probably the catalyst for the price coming off. But then a lot of people...
Look at that, 32% just from the middle of August.
Yeah, I mean, it's insane. And if you think about the amount of profit people made in that time, and yes, it's come off, but I think a lot of people just took some profit off the table. And when you've got the China-US trade deal and loads of people rushing for the exits, going, "Oh, I want to get some profit," you're going to get a line like that.
Lee Home, and that was the Van Eck junior miners that we were talking about earlier on. That was the ETF. It's interesting that even now there are really, really big expectations out there. And when I say big, I mean wide. Goldman Sachs, for example, forecasting 6% rise in gold prices through the middle of 2026. They're targeting around 4,000 an ounce. However, the Bank of America's and the JP Morgan's more bullish. You saw Peter Hambro with me on the show. He brought in the gold bars and such. He's targeting 5,000 an ounce by late 2026, alongside Bank of A and JP as well. Which side of the fence are you on?
Oh, I'm definitely on 5. But having said that, I think it was going to go that to get to 5. And I think that's where we don't want your listeners reaching for the gin bottle. So if they're short-term traders, you need to be careful because, as I say, it could go from here to there, but it could do that to get there. And so yes, you need if you're buying short-term, you need to be careful because I think the volatility, not just in gold, but silver and uranium, I think could be huge, which is a massive opportunity to make money. But I think the secret is probably don't go all in, and if you get it wrong, don't beat yourself up because you will get it wrong.
What is your time frame for that 5,000?
Difficult to say, but I mean, they're saying end of 2026. Is that what?
Yep. Bank of America, JP Morgan saying late 2026. Off the top of my head, Peter Hambro saying 5,000 by, when did I have that interview with him before I left on holiday? So that would be end of September 2026.
Yeah, I think I'll be a bit wimpy and I'll say end of 2026, but I think Peter Hambro could be. It wouldn't surprise me if he was right.
He's been a perma bull for the longest time.
Yeah, I
as
mean,
long as I've known him.
He's a huge.
He's been
gold bull.
right.
He's right, yeah, absolutely. But no, I think, let me say the end of 2026, and then if it's September, I'll jump on Peter's bandwagon.
Having questions here now from Andrew McKilvey saying, any views on Orosur mining? I've got that on my chart here. This chart, wow, very volatile. This is the daily chart for you. Any comments on that, Simon?
I must say, I'm not familiar with that one. I mean, the reason I'm not familiar is probably an exploration company, not a producer.
Mm-hmm.
And
it's on an acquisition trail. It's just bought Minera Monte Aguila, saying that the drilling at the Pepas prospect showing exceptional results. Also, recently the company bolstered its book with successful capital raises and earned a 51% interest on its El Pantano gold project in Argentina.
that's probably why I haven't heard of it or not familiar with it, because I'm guessing the mines are in South America, maybe Africa.
Definitely Latin America.
Yeah, Latin America. So I tend to focus on US, Canadian and Australian, simply because to me, jurisdiction is incredibly important. And so
Endeavour, London maybe?
Endeavour, well, there's two Endeavours. You've got Endeavour Silver, Endeavour Mining. Silver, you kind of have to go to Mexico. But I particularly like companies that are producing silver outside Mexico, because I think that's it sort of fits my sort of safety tab. But there are so many companies in Canada, US and Australia that you don't really have to kind of go outside those regions.
Which ones do you particularly like?
Well, I like producers because they've actually got the gold, silver, uranium, and they're producing it. So they're benefiting today from the price. Explorers, they can be life-changing if you get it right. And I love the idea of having a few in your portfolio, because if you get it right, you literally can make huge amounts of money. But I would say to people, in this environment, there's still a lot of money to be made from producers. So when they look at companies, if they are producing, and you may find some that they're only producing a little bit, but they're producing. But if they're producing, they're generating cash. And I think that is something that is going to be very important.
So I've put up here some of the biggest Canada-based miners there, excluding coal rather, gold and copper and silver there. Any of those names are the ones that...
Look, that is a fantastic list of companies.
Why, thank you.
I wouldn't put you off any of those, to be honest.
Yeah. Tech, of course, has been in the M&A limelight recently. Kinross, we talk about that quite a bit here.
But let me just draw your listeners' attention to that right-hand side. Look at the market value of those companies. First of all, we're all talking billions, and they are massive. And if I said to you, go and invest in a company with a market value of 10 billion, you'd go, well, what's so special about that? Here, you've got massive companies, huge potential. You just look at the net income of what these companies are generating. some of those are in billions. Yeah, Agnico's billions, and so's Barrick. So if you've got a company that's generating $3 billion a year, happy days, and that is 2024. So if you think about what's happened to the gold price
Right
silver price,
now.
yeah, I mean, I wouldn't put your people off any of those. The only one I'd probably say, I wouldn't put you off it because I think it's a fantastic company, but given what's happening to gold and silver, I'd probably be more interested in those, and therefore tech, which is number 5 on there. Not that I don't like it, I think it's a fantastic company, but if you want gold or silver, then you kind of want to follow that list and pick your gold and silver out.
Right, I'm going to be devil's advocate now because that's what we do here. We make sure you get a balanced view. What would you basically expect to see that, makes you think, that's it, I'm going to change my view completely? Is it if you wake up and then there is a proper, true trade deal between China and the US? Is it, peace in the Gaza Strip? It's become a tourist location. But what is it?
Yeah, I mean, it's very difficult to say. It's a very good question because no one likes being wrong. But I would say if MIDI really fell apart, I would put my hand in the air and say, yeah, I'm wrong. So market uncertainty, if there was a US-China trade deal that really, looked like it was good for everyone, if interest rates started going back up, if there's a solution to the debt situation, and if inflation was back to sort of 2.5%, yeah, I put my hand up and say I was wrong. But
until those parameters
until that
change.
happens, and in all honesty, I can't see any of those. You may get one, but I'd be surprised if you get more than one.
Friends, let us know if you see any other, things or factors that could make you have a contrarian view on this. Jessie14 chiming in, saying stop buying gold when the debt clock starts going backwards. Yeah, I mean, as long as the debt clock keeps going north and Elon Musk keeps getting giant pay deals after giant pay deals.
Yeah, I mean, what can you say?
Yeah. Please do slam your questions here, and also don't forget to slam the like and subscribe button. Caught short there saying can't see Anne sitting on a sun lounger. Yeah, too right. I like being industrious there. I was also in Pahang in the rainforest for another reason. We're helping a mate look at sites where there could potentially be specific minerals. Malaysia has inked deals with China to basically clean and process their rare earths.
Yeah.
If you know where to find those processing facilities, it's easy to find them. If you don't, then they're well hidden, basically.
Yeah, they are. I mean, what you just said is so true, and it's why I like producers. But explorers, as you say, you're in the middle of a rainforest. And with all due respect, even if you had found a massive amount of rare earths, by the time they've carried out further exploration, raised money, got permits, worked out where they could actually put a processing plant, let alone a mine, you're talking probably 10-15 years. And that's why I like producers, because I want stuff that's sort of finding stuff today rather than 10 or 15 years time.
So we talked about Canadian-based miners. Which ones do you like in the US?
Basically, I like any, going back to the producers, you had a list up there. I like companies that are, well, say large. I mean, as long as they're producing, I don't really care how large they are. But if they're large, then chances are they've got several mines. So your risk goes down and down. But when your risk goes down and down, quite often your return goes down and down as well, because if you've got a company that makes a massive discovery of, let's say, 200 million, and they've got a market value of, we saw those, a billion, or 20 billion, whatever it is. If you make a discovery of 200 million and you've got a market value of 20 billion, it doesn't really make a huge difference to the value of the stock. But if you've got a smaller company that makes a big discovery that's worth, let's say, 200 million, that can make a big difference to the value of the stock. So a lot really chimes about diversification. I mean, in terms of, US companies, yes, I like them, but I don't want to be massively exposed to the US dollar, which is why I like to have a bit of Canadian and Australian, because this isn't just a gold play. In terms of investing, you're getting exposure to lots of different things. I mean, let's say you're based in the UK, your house is in sterling, your earnings are in sterling, your pension's probably in sterling. And what I'm saying is, why don't you get exposure to some US dollars, Australian dollars, Canadian dollars, as well as gold? And if you've got exposure to those three regions, let's say there's some catastrophic event that affects
the UK, then at least you've got the Australia, you've got the US.
Absolutely. And if you've got a terrible event that happens in Australia, yes, your investments in Australia could tank, but you probably find your ones in the US and Canada fly up. So it's kind of like, I like to have that sort of balance and that spread. So if something bad happens in one region, you're diversified, so all your eggs aren't in one basket.
Nice. Right, we're going to have to stop there, but lots of people still messaging and emailing me. Thank you so much for the emails. I've seen those, and I'll get them in front of Simon. We've got Bill Blaine coming up next. So questions for Bill. We'll be talking all things AI and where we go from here now that we've seen correction starting to really gain traction there. Let's get your questions through to Bill. He's going to be with us very soon. Thank you so much, Simon. Have a good weekend.
Thank you, and you.
And we'll see you very soon.
Tremendous. Thank you.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto live on Trade Live with IG.
To the show where we've got Bill Blaine from the Porridge and, of course, principal at Windshift Capital. How are you, Bill?
Tiggity boo, fine and dandy, and oh, how I have missed you, my dear.
You're saying that just because I'm here. I'm sure you didn't miss me one bit without me triggering. Yeah, who am I? Prompting you, triggering you each time. How are things? I hear you've been making the rounds to a hospital.
My passions in life are first sailing and second skiing. And earlier this year, my wife broke her leg while we were racing our yacht. And she had her full knee reconstruction yesterday. She's doing really well, surgeon really happy. The bad news is that she can't ski for a year.
Oh,
so I'm going to have to go off skiing with my mates, and that can't possibly end badly, can it?
As long as you don't dance on the table at the ski resort, most ski accidents...
Oh yeah, because dancing on slippery stick tables on ski boots, always safe.
Yeah, the number of people that I know that have actually done themselves severe injury, it hasn't been the injuries on the slope. It's actually been après ski. So I'm going to leave it at that.
Yes,
Martin,
it does happen.
Martin chiming in already on the chat saying, is Bill still 100% long on AI or looking at any other sectors at present?
100% long on AI.
I was like, that's the opposite. Is this the right Bill you're talking about? Because Bill has always been a perma bear.
Long on AI. I'll tell you what, at the moment, you can call me Michael Burry.
Oh.
Because I am short anything that I see linked. I'm short a couple of things linked to AI. Not go into them in detail, because to do so I would get a letter from the FCA threatening me with something horrible. But if I was to say that one of the big seven is spending far, far too much and doesn't have that kind of money to spend, if I was to say that I reckon that the Stargate project is a credit black hole where you've got Oracle expected to borrow somewhere in the region of 375 billion to build all the compute for OpenAI. And OpenAI, let's bear in mind, is a company that has revenues less than 4 billion. Zero profits, and isn't going to be profitable today, tomorrow, or in the next couple of years. And so where are they going to go for the financing? We had Sam Altman this week sort of hinting that the US government should bail him out, and then he's backed away from that, and that leaves SoftBank, which is in no position to fund 375 billion. But OpenAI is worth 500 billion apparently. And is, the other thing I came across today is less than 3% of ChatGPT users, that's OpenAI, actually pay for the thing. I'm feeling kind of foolish because I am one of that 3%.
No, did you pay for it?
I actually paid.
No, you paid for it. Why? Everyone's using it for free. Why? Why did you pay for it?
Because I'm a fool and I can write it off against my business expenses.
Nice. Well, also we talked about this often, right? I've always been of the position that we're going cut it whichever way you want. AI, no AI, we're still going to need more and more energy and more data centers. Your view is, which is actually aligned with my view, is that we're going to see China, increasingly win the AI race. And we saw Jensen Huang this week. I thought about you, Bill. saying more to Washington, the message that we really need to start the message I read anyway was that we really need to start making sure that China gets all the chips it wants, because if it creates its own chips,
that boat has sailed.
yeah. And
Okay,
is
so,
anyone in Washington listening?
Tell you what, you've got to stop thinking about me, or your husband and my wife are going to have problems. But the first thing is, I think we ought to make this morning an AI heavy. There's a lot to get. There is so much bad news, or what looks to be bad news. Let's not bother going over, the things about what Jason Hung said about China, or the issues about lack of profitability in the sector, that people can't find enough, the Michael Burry saga. There's all these things. They're all in this morning's Morning Porridge, www.morningporridge.com. It's there. You can probably access it without any problems. The real things that interest me are really 2 points. And the first one is, what is AI? Well, it's definitely here to stay. It is changing the way that we use the internet. And that's probably what it is. Now, I was in London on Wednesday and had a fascinating conversation with one of my top clients, and he is all in on AI. And I'm not going to say anything more about him because he's a great guy, but he absolutely buys the conventional story, which is that it's a paradigm shift. It's going to change the way we do everything. It's going to totally change jobs. It's going to change businesses. And he is fully invested. He believes that this is a speed bump and valuations are justified. My view is that AI is another wave in the stream of computing. It's probably not a paradigm shift. It's certainly a more important thing than the nonsense that was the metaverse, which, remember, nearly sank Meta.
Where is the metaverse now? No one talks about it anymore.
Well, exactly. And that's why my good friend Julian Wheeler has Meta down as his biggest sell, because Facebook screwed up when they renamed themselves Meta, with all the investment into the metaverse, which is now nothing but digital tumbleweed. And they look like they're doing the same thing again here, but we'll come back to that in a moment. If we continue on what is AI, it's a better way of internet searching. That's basically what it boils down to. There were rumors this week, or there was a story this week, some of the big minds in AI saying that they think general artificial intelligence has already arrived. Well, I'm sorry, that is complete and utter ball-chocks. And I did not swear there, I said ball-chocks rather than bollocks.
Sorry, Phil had his finger on the ready.
You went beep. Okay, fair enough.
Ready.
The thing is, we got to be honest about what the large and small language models are. They are just computer power crunching the entire internet to give you the most likely answer, which is why these answers are not correct. The same thing happens in markets. Markets are just the weighted average of participants' votes. AI is just the weighted most likely outcome of the algos. So general artificial intelligence is just not going to happen at this stage. It may well happen in some future world or under quantum computing, who knows? But at the moment, it's just marketing bunkum. But the fact is, AI is here. And it's going to be like the internet firms that sprung up in the 1990s, where they became commodities. And if you've been watching the news, all of them are now gone. They've been subsumed into other things. So as the thing becomes a utility, who will be the survivors? Now, the great thing we learned during the dot-com crash of 2000 was that companies like pets.com that spend billions to make a couple of 100,000 are not a sustainable business model. And that non-profit model, arguing that scale is more important than profit, well, it never works. At the end of the day, you need to make returns. The hope of these things is that some greater fool will buy the company for billions and you get out. And I think that was the great trick of Peter Thiel and Elon Musk, is that they sold PayPal before it was a utility. Sorry, Angie, I've been talking too much.
No, it's good. So question now is, seeing what we've seen in the markets recently, have the chickens come home to roost? We've got questions.
No, they got eaten by the foxes on the way back to the coop. And that's the key thing.
So I completely agree. You know, companies, I only invest in companies that make solid profits and, you know, not, you know, overwhelmed by high, monstrous amount of debt as well. Only invest in what you know. That is the key. Paul Williamson asking there, is Bill worried about the huge volume of retail investors, I'm assuming, using 0 days to expiry options?
Yeah, look, there's some massive things going on here in the market, and you're seeing it all emerge this week. And I call it the guilt by association trade, which is as AI starts to get questions and crumbles, then everything associated with AI gets hit by contagion risk. And your questioner there is absolutely right, because what's been going on, and if we have a look at my particular market, which is the alternatives private credit market, I reckon that 75% of private capital markets funding in the last 24 months has been into things associated with AI. Now, a lot of that is straightforward venture and private equity, startup investment types. A lot of it, though, is things that are secured on data centers, and even on chips themselves. Now, the thing is, we know from the fiber optic cable bust that, yeah, data centers, fantastic, we need them. But if you build too many and they don't get used, they're just piles of bricks and rotting concrete. And we also know that chips, the new Blackwell chip, I think it costs $2 gazillion per piece. But next year, well, actually, no. The next chip that come in will replace them. And this is one of the great things, one of my great mates, Michael Power, who's down in South Africa, X91 guy, he's noted that, you know, chips will change. And all through life, we've had this Moore's law that every year the power of chips doubles and their costs fall. Well, where does that leave the price of a Blackwell chip in a few years? Well, they actually might retain their value. And the reason is this, that we are now up against materials science and physics. It is getting more and more difficult to make chips any smaller. And if you can't make chips smaller, you have to turn around and think the whole thing again. The Americans are looking down the line like this, saying, how do we make smaller chips? How do we make them more efficient?
Yeah.
The Chinese have stepped back and they've just said, okay, do we actually need to make them more efficient? No. We just need to make the way they're used better.
I'm
so
actually chuckling, so I'm gonna disturb you there, because I'm actually chuckling, Bill, because we've got some of your fan base saying, Martin asking, any other sectors that Bill is not bearish on at the moment?
Oh, there's lots of things. Energy, buy energy. You know, energy is fantastic. Renewables, buy renewables, because other people hate them. Therefore, you should love them.
Yeah,
there's
and
lots
also
of stuff
when
I
Trump
love out there.
I just
happen to hate Tesla and AI. I don't hate AI. Tesla, I have a problem with.
Tesla, I'm hoping that I hope Nikki's not watching this as well, because I did think of you when I saw Tesla start to motor up again, but I hope you've made good and come out. You're short, Bill, on Tesla.
Look, Angela, you know damn well that I have squandered millions betting against Tesla unsuccessfully. Since 2018, I have been literally short Tesla, and I have lost every single time. And you know what? The man just paid himself $1 trillion, which, yeah, admittedly, he has a big ask to get it up to a market cap of $8 trillion. It means he will actually have to deliver billions of robots, and I see very little sign of that happening, because I don't think people are going to buy billions of robots. You know what? Most people don't even have a robotic vacuum cleaner, and the few that do treat them as a bit of a joke to talk about.
They only work for about a week.
Parties.
No, and then they die.
Well,
there you go.
do they? Okay, we've never had one. I've always just assumed that the floors clean themselves, until, of course, my wife was ill.
The
Ooh,
the
slap of
robotic,
the hand for that.
yes, I heard that. I'm just going to ignore it. I hope Nikki didn't hear that. The robotic lawnmowers as well. They work great until they don't have enough battery to get back to the charging pods. I have first-hand experience.
I'll tell you a great story about that. One of my best friends has a farm on the Isle of Wight, and he has a beautiful lawn in front of the farm building that they turned into a croquet pitch. I kid you not, we play croquet on it. Now he has bought one of these lawnmowers, and Stephen and I will sit there and watch this robotic lawnmower as we drink caipirinhas. And it is really quite hypnotic. And watching the pattern is fascinating. If that's artificial intelligence, why is it cutting the grass in these patterns? Anyway, we're off topic.
We are.
Because I got asked if the AI bubble is going to hit. Yes, it's going to hit everyone, because all that money that's invested in the private capital markets is now getting refinanced by it being sold to institutions.
So make
And
sure you're
then
very selective.
We've now got retail coming in, and it's retail ultimately that when this crunch comes, it's going to hit everybody. And this is what worries me, is about how deep the crunch is going to be. There will be,
Do you
as
think?
always, when you have a bubble break, you have winners and losers. And you asked me a few weeks ago who are going to be the winners and losers. Well, that's not the way I'm defining it anymore. When the AI bubble bursts, you're going to have survivors who are going to become good utilities, and you're going to have a cemetery full of dead pets.coms who are never likely to make profits and aren't going to get acquired by somebody else.
Funky Gibbon chiming in saying, agree with you, Bill. There's also a good chance there'll be consolidation of existing infrastructure to recover space in the DC. It'll mean new DC will have less potential.
Okay, well, let's get on to the second side of the equation, which is China. Now, while the Americans have been going out and they've been trying to build infrastructure, and they've also got this issue of what's the point of having a data center if you can't get any electricity or water to it? And we've got to find all this money to buy the chips from NVIDIA.
Yeah.
The situation in China is very different.
They've
They
got
have plenty of energy.
subsidies, they've got...
They have an infrastructure, they have a subsidy, they discount, and they've got renewable and fossil fuel. So they've got that in place. And the second thing they've done is they've realized that, okay, Trump has tried to extort us over chips. We've extorted him back over rare earths. But the thing is, maybe that's not the best way to do it with the massively powerful Blackwell chip types. They're doing it with small-scale language models rather than the large-scale language models. And there was a moment last year that I think was one of these sudden revelatory moments that you get in markets, and that was DeepSeek. DeepSeek, which cost $12 million, that is not even the price of a Greggs sandwich in the real world.
Or a sausage.
$12 million to train DeepSeek, and it was almost as good. And everyone said, oh, they've cheated, they've nicked our training, it was a flash in the pan. No, it's not. It was China has taken a different route. China is going and building a different kind of open source, open weight system. It's easily accessible and it's easily sellable to people. Now, the model I use is Betamax versus VHS. Now, many of your listeners, watchers, viewers, whatever, will not know that one, but Betamax was the best videotape thing in the 1980s. But the problem was it was expensive.
I remember that because
no, you don't. You're far too young.
I do.
You're far, far too young.
I also remember why. VHS won the race, and it wasn't because it was better.
Which
it was because
why
it was cheaper and embraced by the porn industry.
Embraced by the porn industry, it's true, but it was cheaper and it was normal, nearly as good. Now, my friend Michael Power, he's looked at it a slightly different way, and he tells a great story, which is about the German Tiger tank, which everyone says was the great tank of World War II. It was enormously complex, though, and very heavy. And the German general said, the Tiger tank is worth 4 American Shermans. The problem is the Americans always turn up with 5. And the lesson there is that the Americans have built a fantastic AI platform, which could be fantastic if they can build it all out. But it's enormously unwieldy, it's enormously expensive, it needs enormous amounts of fuel and power. The Chinese have gone and they've built cheap, simple, plentiful, easily scalable tanks instead. Now, the difference there is during the war, the Germans were only able to build about 1,000 of these Tiger tanks. The Americans built 40,000 of their Sherman tanks. Guess who won? You know, the quantity has a quality all of its own, as they say. So at the end of the day, what we're going to see is not only that China is perfecting its own tech, but they're building it almost as good, but fantastically cheaper. And that means the world is likely to move towards that. And that is really significant because for the last 120 years of the extended American century, the period where America has been the global hegemon, one of the reasons for that is they were the technological leaders. During the Second World War, they built all these tanks and all the aircraft, the arsenal democracy. Since the 60s, every computer thing that has changed the world has largely been built and designed and innovated by the Americans. Now you have a situation in the world where China is about to become the new global hegemon because of its trade with the rest of the world. America struggles to get on and manufacture, mainly because it's a late-stage democracy where people are more concerned with the financialization and regulation and wokery and all bureaucracy and rules and regulations. China's getting on with it.
Just getting on
and
and
if they
doing
end
it.
up winning the AI war, then people are going to look again at America and say, end of, new place.
So because of this, I've been taking a good look at companies like Tencent Holdings. So you don't have to preach to me, preaching to converted here. I've just come back from 2 weeks in Southeast Asia, and boy, is there a meteoric rise in Chinese products. And I've been testing a lot of them. Everything from their version of GoPros all the way to cars to consumer products. It is absolutely not only good, but really flooding the market. Even in the consumer space, you'll be hard-pressed to find shelf space for the likes of Western goods. Alibaba also mirroring what we're seeing on Tencent there, taking a look at the 24-hour offering that we have here on the IG platform. This is the weekly view. You can see that Alibaba is starting to move high price action, looking very good above the 20, 50, 100 and 200 EMAs as well. And on the daily, it's crossed over, but it looks like it's starting to find a strong base at 155, 162, and starting to move back up again after a brief period of consolidation there. Right, we got one other question on the chat, Bill, for you. R. Sachs asking you if you have a view on rare earths and rare earths companies.
Yeah, that is the other. That's another side of the same equation, and I can't really figure out how the Americans stumbled into this trade war with China without figuring out the rare earths conundrum, because they know that they must have known that rare earths are very important towards the production of anything in tech. Yet they put these tariffs in place. They expected China to kowtow, which it did not. That was fascinating while you were in Asia, that meeting in Seoul. And now they're talking about, Scotty Besant, telling everyone we'll have it all sorted in 2 years' time. No, they won't. It is going to take a decade, a Manhattan project-sized effort to build new alternative rare earth supplies. And you got to remember, these are some of the filthiest things on the planet. Processing them, you have to destroy a mountain range to build a kilo of this stuff. And that is going to be really, really difficult to do. You can do it in deserts out in Mongolia and the Gobi. You can't do it in the middle of prime agricultural land in Texas. And I suspect that's one of the real reasons that Trump, aside from the strategic issues, wants to grab Greenland, because there is a suspicion that under the ice there are loads and loads of rare earths, and there's nobody there except polar bears, so they'll be able to create filthy extractive methods of getting it. But that is not a tomorrow problem. That is a decade-long issue, solving rare earths. So that's another reason to add to my list of things why I think global hegemony is transferring into Southeast Asia, not just China, but all the economies there. And that's because rare earths will be part of it.
There you go. And Arsac saying thanks for your views, Bill and Ange. Thank you, everyone. Hope you liked that chart. That was for you, Arsac. Fred also saying it is the cost of energy that will be the unseen decider in the AI arms race. I fully agree, which is why that is a great thematic investment strategy for me. Thank you, Paul. Thank you, Monkey Man. Have a great weekend, all. I hope whatever you're doing, it is productive, and may the odds be in your favor. Bill, always a pleasure.
Thank you very much.